But I do want to get to the CME. Our guests are staying with us. We want to get to the CME now. Phil Streible joins us for some market reaction from the pits of the CME. So, Phil, we're seeing a bounce for all of the commodities that I can see, except maybe cocoa. It's really just been such an incredible morning. The reaction, please, from the CME to the 10 o'clock emergency rate cut.
So the initial reaction was we saw about a 300 to 400 point move up in the Dow. However, a lot of people are questioning the timing around this. If you look at the Fed, they must have been looking at what China was seeing with their forward data going out, and then the Federal Reserve had to act appropriately. The problem is where they did it right now. I mean, the timing is questionable. If you look at the CME at the Fed rate cut, the tool that we use here, we're looking in April, we should have a 60% chance that we have another 25 basis point cut. If you look at June, we've got a 25% chance that we get an additional cut at that. And then there's about a 5% if you go all the way year out at the end of the year that interest rates are at zero. So a lot of people are thinking that long-term effects of the coronavirus on the economy are going to take this continuation here that we're going to see businesses shut down, schools shut down, and we come to almost a closure the way China did, and the Fed is going to be right there as a backstop.
So, Phil, you seem to be enunciating a little bit of skepticism about the timing of the cut, and yet everything is rallying, although, well, stocks are a little mixed now, but most everything else is rallying in terms of risk assets. Does that not last if people don't believe that this is the right thing for the Fed to do?
Look, if you look, the Dow almost went unchanged just shortly after, so they're not really believing it here. It's not going to promote people going out and spending a bunch of money. You're not all of a sudden going to book that cruise that you were going to go on, or, you know, start going to these areas where, you know, there's mass amounts of people. It's just not going to change that. You're going to continue to see people shelter themselves in, go to Costco, go to Target, you know, Netflix, Roku, they're all probably going to rally on this. But I'm telling you, people are going to avoid crowds on this, and people are going to be very skeptical as far as, you know, stopping and containing this. The one positive spot is if you look at the number of cases that are breaking out in China, it peaked right around, you know, 80-some thousand. And if you look at the number of people that are being healed of this, that's rallying up quite a bit. So we're going to see a crossover at some point in China, and we'll see that in the U.S. But the problem is that the U.S., this is continuing to spread right now. The Federal Reserve, I think they were just a little bit too soon on this. They should have been doing it when the market was down that 10, down 15%, then do it then.
All right, well, Phil, thank you for your contribution. Phil Streible, Chief Market Strategist for Blue Line Futures. Let's get an update now.